and I never thought of myself as an insurance salesman. And then as I delved into it, when we opened up our first agency in 2009, or end of 2009, beginning of 2010, then I realized just how vast the capacity and what my background, how well my background fit in there. So that's where we started. I was a captive agent for years, and then we opened this independent agency about 3 years ago. Actually, 3 years ago, July 1st. So we've been doing selling insurance, but really educating people on insurance, particularly about business insurance. We do a lot of commercial insurance, but over the last couple of years, we've started focusing on more on the business, small, medium business insurance. So I'm very happy to be here and speaking with this group today, and I hope they got a lot of questions because insurance there's a lot of moving pieces to insurance. It's pretty vast, and you never realize till you're in it. So there's a lot of things, especially from the business perspective, that we have to do to protect ourselves. And it's just like your home and auto, particularly like your home. And you hate paying it, you hate having it until you have to use it. And sometimes it's too late by then. So if it's
Mhm.
not just having coverage, it's having the right coverage. So I really appreciate you allowing me to be here today. And I hope there's a lot of questions. No matter, there is no small question, none too large, just ask.
And me being that small business, and thank you, in that first business and having been sued, um, and I went to my general business liability insurance thinking under the umbrella that that would have covered my losses. I wasn't
Right.
aware that I needed an additional insurance
Yes.
or add
Yeah.
on to that policy.
Yeah, it's
So,
not just being sued, it's who's suing you. And in your case, it was internally. So there's insurance for external and internal. So that does make a big difference, but we've talked about that for sure.
so let's just start out with the basics. When you're looking
Okay.
at just a general business policy, uh,
Well,
what does that really mean, and what
okay.
types of business, I mean, insurance policy, if someone's just one employee or up to five, what type of policies do you need?
Well,
First of
whether you have one employee or even no employees, you need coverage, and it depends on. That's why I say it's so vast, depending on who you're doing business with. Whether you're business to business or business to consumer, or if you're doing any government contracts, they're going to require you to have certain coverages, even if you think you don't need it, like i.e., workers' compensation if you have no employees. And there's a lot of pieces, and just to give you a synopsis, general liability is what most people typically have in a policy. And general liability, it just covers that, the liability outside. And when I say outside, outside the organization. So if somebody sues you, or if there's an accident, there's something that is considered at fault of the company, that's where general liability comes in. And along that, you have other coverages: property coverage, your building coverage, business personal property, which is everything inside your building that's a part of your business, business interruption policy, which is if you're in Atlanta, you heard, if you were downtown business and you heard about the water being contaminated and them shutting down businesses, that's where business interruption comes in. You may, if you're looking at your current policy, you may have a business owner's policy, which is just general liability with some of the endorsements already in. So it's more of a package deal than just general liability. Workers' compensation, commercial auto insurance, and that's another one too, where commercial auto has some very intricate pieces in there that if you're not aware of, you may have coverage or not have coverage that you really need.
so,
EPL. Oh, I'm sorry. Go ahead.
as an example, let's back up with the commercial car insurance, right?
Hmm.
I see a lot of businesses, I mean, a lot of individual sole proprietors, they'll have their business on the side of their car,
Yes.
and someone hits them. Now, is that something that's going to go to that individual, or is that something that the company's going to be
Well,
liable?
there's a difference if you hit them or they hit you. Now, just because you have the sticker on the side of your car, that doesn't mean your car is registered with the business, right? And that's where you get that fine line. So
Mhm.
typically, insurance is following the person in the vehicle. So if somebody hits you, it's going to go to the personal insurance. All right. If you have commercial auto coverage and you hit somebody else, then it goes to your commercial auto policy, not your personal policy. Okay. There's a big difference. And too many times I have a customer right now who has a commercial vehicle she uses for her business, and it is considered a high risk vehicle because of the type of business she does. But she has it under a personal auto policy because she just didn't know. And whoever the agent is, never inquired about how she was using the vehicle. So when something happened recently and she had an accident, the personal auto just said, we're not covering that. You did that in the act of using it for business, not just driving back and forth. She actually was using it to service customers. So that's different. So that policy, they're going through a major deal right now, whether they will cover the policy. If they do end up covering it, they're most likely going to drop her, which is really, really bad on your insurance, because insurance, it goes into a database and they see everything. So when you go to the next company, they see it, you will be rated for that. So how you have your vehicle rated is very, very important. Very important. And keep in mind, advertising is good on the vehicle, but it also opens you up to liability. They know how to find you, right? So everybody thinks they're going to get rich by suing somebody when they have an accident, even if they're not hurt. They listen to too many commercials on TV saying you can get $4 million, and you were hurt in an accident, even though it wasn't your fault. We can get you money. But the only ones that make money are the lawyers, and the only ones that pay for it are the consumers, and that's everybody collectively. So there's a lot of moving pieces to commercial auto. And I say make sure you ask a lot of questions and make sure you have that vehicle rated correctly, because even though it costs you more money to have it as a commercial than a personal vehicle, you don't want to have a major accident, get sued for something, and then not have coverage because you had it listed incorrectly.
Thank you, thank you. I know I hopped over there and
That's all
we
right. That's all
going
right.
over, but I
No,
wanted to get that moment. But going back to the business and the type of insurance.
well,
So
yeah. The
first
other
day of,
ones, I'm
mhm,
sorry, I apologize. The other ones I was going to bring up, just to make sure we covered it because you brought it up, is employment practices liability, which is not an insurance policy by itself. It's usually an endorsement on an existing liability policy. So if you have a business owner's policy, a BOP policy, they call it, or a general liability policy, a lot of carriers have EPLI built into it. It's usually going to be for a minimum amount, maybe 25,000, but employment practices liability covers you if somebody inside your organization sues you, an employee, a manager, an ex-manager, somebody you're trying to hire sues you for discriminating. There's a lot of things that can happen with EPLI that it would cover that your regular general liability policy won't cover. Okay, and we can go in that further if you want. Cyber
and
liability, cyber.
what's
I'm
the
sorry.
average amount of coverage should someone get
Well, if
under that insurance?
if you're just taking what they give you, a lot of times it's included. Sometimes it's as low as 10,000. Most of them, that when they include it in your policy, it may be 25,000. Depending on how many employees you have, the risk is higher. Some people go up to 100,000. That's probably a good number to hit. Some go higher depending on. We deal with companies that are very in size, right, and vary in employees. And the ones with the larger employees, they're higher at risk. They tend to have higher coverage. But for most small businesses, most you'll see, I mean, the average you'll see is usually 25,000. And that's usually because it comes as a part of their general policy.
And that covers your attorney fees. What will that any settlement? What will that
it, it,
actually
it can
cover?
cover all of that, right? It can cover part of the settlement. It can cover part of it. cover attorney fees, it can cover whatever the judgment is. It can cover a number of different things depending on what the actions are, right? So if you're getting sued by your employee for discrimination, you're going to have the attorney fees. But if there's a settlement, it'll go and cover part of that settlement. Whatever, how much coverage you have is going to be determined in the settlement. And a lot of the lawyers will look, they will find out what your coverage is, and they'll sue based on they know what your coverage is, because they can guarantee to get that money. If they sue you personally, there's no guarantee they'll get it all the time. It takes too long, but they're going to make sure the minimal they'll do is what your insurance covers.
That's wonderful. Errors and omission, because I think that's where people get those two confused. So
Yeah.
when you're looking at, is that also part of the general liability, or is that an
No,
identical?
errors and omissions is a different policy all in itself. Some people call it professional liability, depending on what your occupation is. If you're a doctor, it might be medical malpractice, but they still might have errors and omissions. And if you're a lawyer, or if you're a licensed person like myself, I have to have errors and omissions. Some will have professional liability if they're a counselor. It varies, but the coverages typically are the same. Now, errors of omission and professional liability are totally different than EPLI, right? That covers your work, right? If you are sued because you did something incorrect in the execution of your job, okay? If I have an errors of omission or professional liability policy, and my customer sues me, said you canceled my coverage and I got in an accident, but you weren't supposed to do it and you did this, and they go sue me, that's where my E&O policy comes into play, right?
Okay, so it's on an individual or company.
It can be on it's usually on individuals. It can be on a company. I do some medical practices. So it'll cover anybody that's under that umbrella of that. If they're licensed, they're usually going to ask who's licensed, who needs to be listed on here. It's not usually a general covering everybody, because everybody is not covered. Everybody is not licensed, or everybody does not fit under that same profession.
Okay. Um, and what exactly is key man insurance?
So
And
key
why
man,
should someone have, and at what point should someone get a key
sure.
man insurance and
Well,
all
key
of that?
man is a life insurance policy. Okay. So it's a life insurance policy for business. If you ever heard of business life insurance, that's usually what they're talking about, right? A regular life insurance is, you can, for businesses, we do it a little differently. We'll have a life insurance policy, but you can have disability, you can have long-term care, you can have simplified guarantee issue policies. There are different types of policy. When we say key man policy, if you have a partnership, if you and your if you and your partner started a business, or you and your business partner started a business, you want that policy to cover each other. So if somebody passes during the time of the business, then that policy will kick into place. Usually it's owned by the company, it's paid by the company. It's not a tax write off, by the way, but it's owned and paid by the company, and the company is the beneficiary. So they call it key man, because if somebody who's key to the business, who's vital to the business, passes away, you can use that money to replace them, to maintain operations. In certain cases, if on the buy sell agreement, you may have a buyout clause. That's where it cover that buyout clause and pay for you to buy that partner's spouse out, because they may inherit that business. And if you're a licensed business, like if you're insurance, and my business partner passes away and his wife takes over their side of the business, she knows nothing about it and she's not licensed. Well, we have an agreement that says he owns 50%. So we figure out the value of the company, and we use that life insurance policy to pay that person off, so that the company buys back that stock. So
So
now,
that's more
and
so for a partnership agreement
well,
as
it could be for a partnership. It could be for it could be a key employee. It could be an executive. It could be your CEO or your CFO of the business, even as a small business. If you have somebody that's not a partner, but they're a vital part of your business, you can buy a life insurance policy on them. It's a key man policy where the company is the beneficiary and the company is the owner of the policy, not the individual, not you. just the company. So the company reaps when that person passes, they get the money, and that money could be used to replace them or sustain you while you find it can help you. You know, you have to go do a search to find somebody else. There's a number of things you can use the money for, but the company owns it. The company is the beneficiary in that case. So it can be an executive in the business and it can just be a vital employee. And I've
And would
seen
I
key
be
man
considered
policies. I'm sorry.
would I be considered a vital employee as the owner of the company? And
Well,
would
as yeah, you are right, but the company can get a policy on you, but you're key because you can't. The company doesn't run without you unless you have a C-level person that could take over. Right, that money would go to get some hire somebody to replace you, but that depends on who starts to run you, who runs your company after that. You have to have a policy, or you have to have provision in place that says who's going to take over the business.
your succession plan?
Yeah, most small businesses that are one man owned really don't have that. They don't think about that. Even for their spouse, they don't have that in place.
Mm.
So that's we talk about that a lot when I do seminars with people who are helping people launch businesses. We talk about that a lot. That succession plan, you don't even think when you start to have one, but you do need one. It needs to be in writing.
I love this. Thank you. You are educating us on this.
Well, I
Um,
hope so.
uh, what are some of the key things that you find is common with small businesses that they're lacking when they're coming to you in that crisis that they should have known? Mhm.
Yeah. Well, hindsight is always 2020, right? So a lot of them say, "Hey, I didn't know," or their agent may have told them, but they're, when you're starting a business, every dollar counts. So they're looking for the least expensive policy, not the policy that they need. And what happens, they get a policy that fits them when they start the business, but as they grow, they never change, right? So that's really where we see problems. And when people come to me, it's usually they're coming to me after something happened, if they're coming with a policy already. And sometimes they're just trying to save money, but sometimes they've had a claim, they've had workers comp, they've had a EPLI claim, and they're saying, "Hey, I didn't know, he never said anything." And sometimes it's really not the agent's fault. They may have said something, but at the time you were focused on what's the cost and not what is my need. And we always try to start with needs. That's just whether it's life insurance, which we do a lot of, or the business insurance. What's the need? Tell me about your business. What do you have now? How many employees? What kind of revenue do you do? What's your history? What's a claim history? What's the business history? There's a lot of moving pieces to it, but you really have to kind of sit down with a professional, and it's not real time consuming for them to even quote it to find out where to fit you. And that's your carrier is as important as your policy, as your coverage. You got to find the right carrier with the right coverage for the right business. Because if you just look at cheap, it's fine until something happens, or
Mhm.
until you go to get a contract and you're doing a state and local government contract. And they say, well, wait a minute, you need workers' compensation. And we go to quote workers' compensation, but you've been in business 5 years and never had it. Most companies don't want to insure you because your risk is higher. When you have an experience, there's a thing they do, it's called an experience mod. So if you've had workers' compensation, you've had it for a number of years, at least 3 years, and you've had it registered with the state, you get this thing called an experience mod. So it shows your history, your claim history, and your history of how long you've had it. So it gives you a discount when you go to other places, when you go change carriers. But if you don't know that, then a lot of times people are just getting the policy that fits them at the moment, and they don't ever change it as they grow or they change. Some businesses don't grow, they may even regress, but they never change their insurance to fit.
Can you break down again? We're layman's.
Mhm.
When you think of workers' compensation, what exactly does that mean?
Well, workers' compensation, and I'm glad you asked that because there's different policies in workers' compensation. If you have employees, the state used to say, the state of Georgia, I'm speaking of at the moment, if you have It used to be if you had 3 employees, then you had to have workers' compensation according to the state of Georgia. Then recently, in the last couple of years, they changed it to even if you have 1 employee, you need workers' compensation. There's a lot of businesses that don't have workers' compensation. Or I get a lot of sole proprietor companies where they want workers' compensation on themselves. Well, it's not built, the product's not built to cover the owner. You can get coverage if you have other employees, but you by yourself, nobody wants to cover you. It's called a ghost policy. And even then, that doesn't cover you. It's just a general policy to say you have it. So that if you're going to do a contract that says you have to have workers' compensation, you're going to have it. And you get it from the state, and it's going to be NCCI, and it's going to be no coverage, but there's a minimal premium on it, usually $1,500, sometimes less, depending on the type of business or the type of risk you are considered. But workers' compensation covers your employees. I'll give you an example. I do a lot of restaurants, and I was talking to the owner, and somebody had a slip and fall, one of the employees, in while we were having the conversation, broke her ankle, had to have surgery, ended up costing a total of $60,000 by the time the whole claim was settled. Well, if he didn't have workers' comp, he'd been out of pocket, or she'd have sued him, and a lawyer would have tried to sue him for a lot more because they would get their part too. So workers' compensation covered that, so that they paid for the surgery, they paid for any lost wages, they paid for that. And that's the value of that policy. Now, any of them, you hope that doesn't happen. What she didn't have, she should have had some slip resistant shoes on. He gives them to all employees that work in the kitchen. She just forgot hers that day and she came in. So, there's some practices, standard practices that go along with that we talk about a lot. That even during the workers' compensation, after you've had a claim, we sit and talk about, hey, how do you change that to keep that from happening again? Because the more of those claims you have, the more expensive you're going to pay, and the less companies that want to insure you. But it's one of those things, you want to have it, but you hope you don't need it. But when you need it, you better have it.
Mhm. So starting out, what's the what's the bare minimum? Because again, you're a small business. You're
There's
growing.
yeah, that's a tough call because it varies, and it's like insurance and loan. It varies per company, per situation, how big your business is, what type of business you do, what kind of revenues you do. There's a lot of factors in there. There just is none. It's kind of like a home insurance. You can live next to your sister and have the exact same home. You're the exact same age. You could be twins. You have everything the same, but her premium's going to be different than your premium because her history may be different. She may have had a claim in the past, or she may have less credit because there's a thing called insurance credit that is vital, and a lot of insurers do it. It's not your personal credit. They don't see a credit score, but when you have a insurance history, your payment history goes. If your policy is always canceling for non-pay and you had to reinstate it, or even if it gets in cancellation mode, all that goes into a database. And when the next carrier goes to look at you, the underwriter sees that insurance score, and you're rated on that. And that's why you may pay differently than she's paying, even though you have the same thing. And it's the same across, whether it's commercial insurance, workers' compensation, especially. They have a history. Everybody's got an insurance history, and that's important.
I just always feel like all these it feels like a scam with these insurance for the most part. You know what I mean?
Yeah,
Um,
yeah, I understand, but I'm
doing
gonna tell you now,
card.
it's like anything else. People say that to me all the time. And I say, well, first off, I'm just the agent. I'm the messenger. I don't. They don't pay me, like I'm not collecting all that money. But again, if you look at the number of people that use insurance, it seems a scam until you need it. And when you need it, it used to be, and I'm telling my age here. Well, I don't mind. I turned 60 the other day. So back in my day when I was younger, if I had an accident and hit the bumper on another car or anything, it was $500 to replace a bumper. Well, now the average cost to replace a bumper might be $3,000, $4,000 because there's backup cameras, there's lane sensors, there's all this technology in there. So everything exponentially has gone up. So the premiums have increased based on that. Plus, Georgia is a what we call a high risk state. There's so many drivers here. There's so many. Everybody wants to sue. And you've seen the commercials. If you watch daytime TV, every other commercial or in the radio on the radio in the car, it's a lawyer, it's Ken Nugent, it's somebody saying, "Hey, I can get you money." So everybody feels like no matter how small the accident is, they're going to sue and get a bunch of money, and it rarely happens. They rarely get money. They may get some physical therapy paid for, which is sometimes a waste of time if you're not really hurt. Everybody's going to have a little soreness on their neck, but if for a true accident, I mean, if there's any kind of accident, you can have some soreness. It's going to go away, but you're not going to get $100,000. The lawyers will sue. They'll get a little money. You might get a few dollars here, but guess what? Your insurance is going to go up. You're going to pay it back as you go along with the next carrier or with the carrier you're at.
And they'll drop you. That's what it's like.
Well,
Let
if
the
only
Lord.
if you have, yeah, if you have too many too close together, that can happen. Yes, yes, that's not good, but we go through it all the time. I answer a lot of questions around that.
um, for home-based businesses, uh,
Yes.
what type of um, how do you balance that from home-based and your regular? Uh,
Well, we've had an influx of home-based businesses because of the internet, right? So a lot of people work and selling products, even if they're not home, call it home-based because they don't have an office, but they're selling online. Internet sales have grown, and the companies have just grown leaps and bounds. So cybersecurity, cyber insurance, cyber policy is probably the most underused, most badly needed policy out
I
there
didn't
for
hear you
home-based
say
businesses.
pharmaceuticals.
Yeah, well, pharmaceuticals is well, pharmaceuticals is a little bit different. Somebody mentioned pharmaceuticals. In what capacity are you talking about? You talking about working from home, or are you talking about your business being from home?
uh, was that you, Stacy?
Is it Stacy Mollison?
Yeah, can
You
you
got to
talk?
unmute, Stacy. I don't know if we lost her. So with pharmaceuticals, I mean, I really have to know to what capacity she's asking the question. So everybody has heard of all the cyber attacks that have happened. It's happened in small businesses, large businesses. And with the small businesses, they're not holding you for ransom like they are the large business. What they're doing is they are trying to steal your customers' information, or they're trying to steal your financial information. The banks, and we hear this more than anything because I deal with a lot of bankers, the banks have been inundated with accounts being hacked, particularly business accounts, right? The accounts being hacked. And that's because you're doing online, you're doing a lot of transactions online. And when you do that, you open yourself up if you don't have the right level of security. And a lot of small businesses that are started doing online sales don't think about security because they think they're the only ones that can get in their laptop, and they're grossly wrong because it happens over and over and over again. So having an endorsement on your business owner's policy, or you can get a separate cyber policy, and it just depends on the type of business, what level coverage you need, and that's going to be based on the number of transactions, or how you're doing transactions, or what your product you're selling, or what your service you're selling. There's a lot of factors that go into that. So as you talk to your agent, if you already have a general liability or if you have a business owner's policy, ask them about the cyber endorsement. And keep in mind, a lot of those type of endorsements pay you after. So something happens, it's just like having something happen at your home and somebody steals your identity. Well, you have to go through certain things, and you have to pay out before they pay you back. They don't pay you up front. You have to go pay out first. So you're going to hire a lawyer to get your identity back, and you're going through this process. You may have to pay this and pay that. Then they cover you for a certain amount and they pay you back. So they don't just give you a check and say up front, here you go. You have to have a loss first, and they're going to refund you for that loss up to the amount of your coverage. Does that make
And I
sense?
hadn't thought about that. I don't have it. So thank you. Thank you. We have a question that was in the chat by Miss Peavy Ruby. And she said, I don't have any employees. All work is subcontracted out. What kind of insurance should I have for my business?
Well, are you talking, is she talking about for workers? Workers' compensation is specifically for workers, right? They don't want you 1099. We have a lot of contractors, 1099 employees, right? That supposed to have their own. But I'm gonna tell you two things. One is you don't have to have a workers' compensation unless you have a contract that says you have to have workers' compensation. Then you would get a ghost policy. That's a policy that really covers no one, but it shows you have workers' compensation, right? It's a lot of money to pay to cover no one, but that's what you have to do. There's a lot of companies that are going to the 1099 employees. Now, keep in mind that 1099 employees should have their own policy. But if something happens, they will still not hesitate to sue you as a quote unquote employee. Now it's gonna be different because they are contracted employees. That's if you have certain provisions in your contract. Are you actually, and that's usually the question we ask, do you have a contract with your contracted employees? Right? Do you have for your EPLI, that's one thing we talk about a lot. Do you have a handbook, an employee handbook that says what you can do, what you can't do, what their relation is to you? That same handbook, you will have a different handbook for a 1099 employer. You have a different contract. You need something in writing to say that they're 1099. Just because you pay them without taxes, don't mean it depends on what they're doing, how much they do it for you, whether you're liable for anything that happens with them. Does that make sense?
Ruby, did that answer your question? You can unmute
Um,
yourself.
Not really. Okay, so if I have a contract, I get a contract,
Uh-huh.
and um, the company that's working on the contract is not employed by me.
Okay.
I do have a contract with them, stating that they will do the work, how much they're gonna get paid and everything, but
Okay.
I guess to cover me, and most times these contracts may be out of state,
Okay.
may not be here in Atlanta. What type of insurance would I get to cover me? Because I have been sued before, but not for this. It was for
Okay.
one of my rental properties. But
Well,
so
okay.
I'm like, yeah, insurance. They covered me the whole way. But
Can I
yeah,
ask what your business is, Ruby?
I get federal government contracts, um,
Mm-hmm.
for janitorial or landscaping services.
Okay. Okay.
That may be from,
And then you contract out for the work.
correct.
Okay. So liability is your biggest issue, right? And I
Mhm.
suggest I tell anybody on a liability policy, if your contract with the government says you need $1 million, 1 million, 2 million, that's typical, right?
Mhm.
There's a fine line between 1 million, 2 million, 2 million, 4 million. It might be $100 a year, right? Get the 2 million for me, right? The
Mhm.
only time you have to worry about anything outside of that is your if they require you to have workers' compensation, which sometimes they will. Typically on those contracts, and I see a lot of those with the smaller businesses, especially because you're really just a part of a bigger contract, right? They use you as a sub essentially. So they're going to give you a portion of the business. The larger contract may be with a certain company who can't fulfill, or they need some minority contractors, and they bring in small businesses who end up contracting out. General liability is your biggest issue from there because general liability covers you for anything outside. You don't have employees to cover, so you don't need employment practices liability, which is EPLI. You need the GL. Okay.
Okay.
And general liability is the for commercial insurance, it's the most basic and it's the cheapest insurance you can have, right?
Okay.
If you get a business owner policy, that's usually where you have property or business personal property, which is a different thing depending on the business. And I'm assuming if you don't have any equipment or if you don't have a bunch of computers or anything, the BPP portion, the business personal property portion, really doesn't matter to you. It's the general liability, which
Okay.
for you is going to be the least expensive policy you get.
Okay. All right. And I can write that off. So that's fine. Be a part of my insurance to bring things in. But
Sure,
thank
sure.
you.
Uh-huh.
Yep.
I have a question. This is Stacy Mollison with Lever Management Group. What is your take on captive insurance?
There's nothing wrong with captive. Captive insurance is, and I used to be a captive agent, right? That's just companies that are standard companies that write standard policies. Captive companies, you'll find a lot of times they broker out to excess insurance companies, or they go to brokers like myself to get policies that they can't write themselves. Captive companies focus mostly on home and auto insurance. Now, if you're talking about there's bigger companies that are considered standard companies, like a traveler, so to speak, right? They don't have captive agents. That's usually what that means. It means you can only sell their product. But a lot of times, even within that, they will have a brokerage arm because they can't do everything. So their focus may be home, auto, and some certain small business they'll write directly. But a lot of the companies are getting away from writing direct small business because the profitability wasn't there. But a lot of them use that to supplement when their property and casualty isn't profitable. And that's what you're seeing right now, especially in home insurance. So it depends on what you're talking about with captive. Are you talking?
Auto. I have a
Are you,
logistics company, so our insurance is increasing dramatically, and
yeah, yes, it is. Yes, it is.
considering
Yeah.
going to a captive.
Well, captive won't be any cheaper. What kind of, when you say logistics, are you is it trucks or
Yeah,
is it
trucks.
cars?
Trucks.
Trucks. So 18 wheels, are they doing interstate or are they going across country, or are they just doing within the state?
Within the state.
Okay. Within the state is a little better. Captive is not going to be, they're trying to get off of those risks. That is high risk business. Okay. The reason is because one, they're driving all the time if you're doing logistics. And two is if it's interstate, that's better. If you're doing within the state, that's better because you're not driving as far, but your risk level is high because, just somebody driving a personal vehicle goes to work and back, goes to the store and back, goes to run out. If all you're doing is driving, your risk is high, and you're liable to, much more liable to get in an accident. And now, especially in the trucks, there is no small accident in a truck. When an 18-wheeler hits somebody, not only is the damage because of the size of the vehicle bigger, but when the cost of repairing an 18-wheeler, as you probably know, is very expensive. And then the lawsuits tend to be a lot bigger, and they tend to sue a lot faster. So over the last couple of years, and I do a lot of transportation, a lot of logistics, a lot of trucking, it's gone up dramatically, right? And there's very few that I've seen. I don't know which company you're talking about as captive. There's very few of the captive companies that will even do 18-wheelers anymore. And back when I had a State Farm agency, they would do a lot of
We
box
own an
trucks.
Amazon DSP.
Oh, do you? Okay. Well, good. Good. So we done the Amazons and the vans. Are you doing the electric vehicles, by the way?
Yes, I am.
Okay. Okay. So the cost associated around the electric has gone up because they went to all electric, because the replacement cost has gotten so much higher. But just the driving, the more vehicles you have, so a lot of the captives will only do a certain amount of vehicles. Do you have over 10 vehicles?
50.
50. So a lot of them won't do. You're limited on the captive space who would even do 50 vehicles. If you were, I'm just going to throw Progressive out there. Progressive does a lot of trucking. But if you got 50 vehicles, you have to go to their fleet. They won't do it under the regular Progressive. You can only quote it and do it under their fleet system. And their fleet system is a lot more comprehensive. Their backgrounds, the cost, everything is going to be a lot higher. And that market has just changed drastically I'm going to say over the last 2 or 3 years. We work with maybe 4 different companies that we can do 50 vehicles through. And it's worth doing, but you got to do a lot of work up front just to get the quote. They want to see loss history. They want to know every driver. They want to look at your current policy.
Your main take is it's not a huge difference as compared to regular versus
No.
Okay.
No. Well, there is in premium, right?
Right.
If you can get a captive company to do it, the premium can sometimes be lower, but the risk has changed drastically, especially with the franchises like you're doing with Amazon. Just because they tend to have more drivers, their turnover is higher, their accidents are higher. That's what they're seeing. So we've seen that those premiums grow exponentially. They're getting pretty high in some cases. 50 vehicles is a lot, so not every captive would do it. You're probably only, and I don't know who you're calling it, what you mean by captive. When I look at captive, what we think of captive, it's a State Farm, it's an American Family Insurance, it's an Allstate. A lot of them won't do them vehicles at that number. It used to. When I was American Family, I had American Family Agency for 10 years. We did a lot of that, and I would do the box trucks, or I would do the vans, the like yours, and they would do 35, 40. Now they got off that risk. They won't do them anymore. So everyone is different, and that's what I consider a captive. Captive is when they can only sell their product, but we're independent, so we go through several different companies to when we're quoting a large fleet.
All right, thank you.
You're welcome.
Dr. Irby, you had a question?
Yes. My question was, let's see, it's about customization. So as business policies are customized, what types of coverage should always be included regardless of the customization?
Well, when you say customized, usually customized to your business. So
Yes.
that just means certain endorsements are going to be there. There is no general. You're always going to do the base, right? Depending
Mhm.
on your business. What is your business, Dr. Irving? I mean, are you a medical doctor?
No,
Okay.
well, I have an EDD, education
Okay.
doctor, but my
Okay.
business is a consulting firm, and I'm an executive coach.
Okay. So that's a little bit different. You're going to be just the liability, maybe business owner's policy, but there'll be endorsements around what you do, right? You may have to. Do you have professional liability?
No.
Okay. I would suggest looking at that. There's
Okay.
not a lot of endorsements on your side. I do quite a few businesses that are similar to yours, consultants, different types of consultants. Some are life coaches, some are different kind of coaches, some are IT consulting, and they have certain ones based on that. There is no, the base policy is just a general liability. It's the endorsements that'll make a difference on your business, and then it'll make a difference the type of coaching or consulting that you do.
And what if my consulting will extend to government contracts?
Well, then your government contracts, they're going to have their own, they're going to own their own requirements, right? I
Okay.
get quite a few, and I look at them all the time, and I say read them good, but they'll have an insurance section. And they're going to say you have to have A, B, C, or D, and if some of them will say you have to have workers' compensation. And a lot of times, I just tell people go back and let them know you have no employees. All you're just doing 1099 when you hire them based on the contract you get. Sometimes they'll say, okay, we can get past that. Sometimes they'll make you have a ghost policy.
Okay. Thank you.
You're
And
welcome.
they may ask for a copy of it. Some
Oh,
Brian.
they'll always ask for a cut. What they'll ask for is
Mhm.
certificate of insurance, right? And it comes from us. And we'll give you the certificate says this is coverage you have with this carrier. Now, if you have with another, you have your workers' compensation over here with one company and your general liability with this other company and your property covered with this company, well, then you've got to get them. They're each going to give you a certificate, and sometimes they want you to consolidate them. So you got to ask at least one of them to consolidate it for you.
Yeah, I just want to add on to that, Bobby. I wanted to add on when you was answering the question for Ruby and the rest of the crew. I know a lot of you guys have been doing government contracts, but it literally states it in the documentation that what you need for insurance. It says literally what you need. If you didn't see it, you must have overlooked it. A lot
Yeah.
of these contracts will say you need general liability insurance, kind of like what he was saying, like up to 1 million or maybe 2 million, depending on how big the project is, because they want you to be covered and not have liability issues when it comes to anybody. It doesn't matter if it's a W-2 or 1099 employee. And also they'll ask you, do you have a certificate of insurance, to make sure that you say who you are as to be insured as the company. Sometimes with the counties and states, they will actually allow you to win the award and then get your certificate insurance or your liability insurance after the fact. But those questions you have to ask um, during the Q&A before the deadline of the submittal.
Well,
And
and that's a good point, Brian. And I would typically ask if you have a government contract and they'll have an insurance section. I'll say copy the insurance section, which may be 3 paragraphs, maybe 3 pages, and send it to me so I can see what the requirements are. And I can't tell you how many times I look at people's policies and they have part of it, but they don't have all of it. And a lot of times those contracts will not be accepted until you have all of it. But the key thing is the language, because some carriers will do a general liability. They'll do what you need, but the problem is the language won't be correct. If the language isn't correct, some of them won't change their language, right? I'll give you an example. If you're doing an SBA loan, right? And I get a lot of small businesses that have SBA loans, and the SBA requires to be a loss payee, not a loss payable. Fine line, just language, but some companies won't change the language to loss payee, and some of them will. So SBA requires it to say something certain, and it has to be in that certificate. Now, the worst thing as an agent, I will not lose my license by just writing something on a certificate, because if anything comes back and there's a claim and it's not being paid because of language, and I created the language just to satisfy this so I can get the policy, then guess what? That's where I'm going to get sued. So I don't want that to happen. So I make sure that the carrier will accept the language. And that's key, because it happens. I got a case right now, and it's SBA. Guy has an SBA loan for his building, and SBA says, hey, I need this specific language. And he came to me because he needed the contract, and he was supposed to start the contract last week, but the insurance company he was going through never told him that they would not change the language. So they went through a company, and when they did the policy, they paid for the policy, didn't realize they couldn't change the language, so they have to change policies. And they're waiting to get the contract for the contract to start. They can't do it until they satisfy the SBA. SBA is very picky. They said, I need the certificate, I need it, and it needs to read this way. So we were able to get somebody else. Now, we had to go to a different company to get it, and actually they end up saving a little bit of money by going to that company. That company was willing to change the language, and they had the same coverage for a better premium. So it worked out for them, even though it cost them 2 weeks. I think it was 2 weeks later before they could start the contract. So they were paying somebody to sit there and wait. But that's what had to happen. But you have to really read that section, especially on the government, especially on the government contracts, and especially when you have certain loans. Know what that they all have an insurance clause in there to tell you exactly what the coverages are.
And for me, I encourage a lot of our small businesses to, once they start winning contracts, to purchase a building. So when you're looking at commercial building policies, because now through those contracts, in essence, the government is helping you pay for that building. So
Mhm.
there are a different type of commercial uh, policy that they should have.
No, I do a lot. I do a lot of commercial property, right? So a lot of times, if you have a BOP policy, it's a business owner's policy. It's a general liability that also has property in it, right? So the property coverage, even if you have, sometimes people leasing building, the landlord will require them to have certain coverage for the building as well. So there's a property component to most of those business owners policies. So especially if you're buying the building, I got one right now that just came to me yesterday, and it's a movie studio or some kind of studio I have to go look at, because they get picky on these buildings. Right now, age of buildings hasn't been updated. There's a lot of moving pieces to property policies. Not just if you're going to buy the building, quote the insurance before you close the deal. Well, they're going to want you to have it, but the lender's going to want you to have it before you come to closing table anyway. Just make sure, because some carriers have gotten real picky on the property coverage, just because the losses they're high, very high on certain properties, especially on older buildings, especially when if they're built before a certain time and the pipes haven't been updated or the electrical hadn't been updated, they've gotten a little more picky on those. So property coverage, you can have a standalone property. It's harder to get standalone, meaning a policy just for your property by itself. If you combine that, some will require you to have the general liability with the property coverage, because they want to make sure that you have the base coverages in there, because they don't want you just having property without having liability, because then you're going to try to come to them and they're going to be a part of a suit they don't need to be a part of it, because they're just covering the building, right? So they want you to have GL. So that some of them will make you combine it, but property coverage is essential. And then the business personal property coverage within that property coverage is important as well.
Okay. This is wonderful information. We have about 4 minutes left. Anybody have any questions that you want to ask Mr. VanBuren?
We had some in the chat, and I think they may have already answered. I didn't look. I just saw some more going in the chat.
Is there anything that's being done to combat the enormous insurance rates increase in places like Florida and some of these states where
Yes.
it's
Yes.
becoming a serious issue? I had someone I know who her commercial property insurance just
Yes.
tripled from last
Yes.
year.
Yeah. There's a lot that's happening or supposed to happen, and I'm gonna tell you what happens if this next election can affect that too. And I'm talking about the state elections, not the national election. I'm talking about what happens within this state. There's some tort reform that's going to happen. It happened in Florida, Texas, California, probably the worst states to have a property in right now. The losses are so high, the claims are so high. Georgia in particular is getting they're becoming just as bad as Florida. That's why the insurance rate, particularly on property, homes, homes and commercial properties, has really skyrocketed. And Georgia, and it's more on auto than home, is one of the top 3 countries as states in the country for fraud, for insurance fraud. It's rampant. And when I say fraud, that's what they call it, fraud. But false claims, there's been a lot of talk around the false claims. They're trying to do tort reform so that these lawyers can't just go out and sue every insurance company and try to just get money when there's none that was earned. Nobody was really hurt in the accident, or it was nobody's fault. And you don't want to. It might become a state like Minnesota where everybody claims their own losses, right? You can't sue anybody else. You got to fix your own car if you have an accident, even if they hit you. So there's changes that'll happen. It's in front of the state legislation right now. How fast they will move, I don't know. Florida is, I sell in Florida. I have a license in Florida. I do a lot of, we do 11 different states right now, some by choice, some not. But Florida is very, very difficult, and Georgia's following suit. Florida's to the point that for home insurance, most of the major companies will not write home insurance in Florida. So that's why their premiums have gone so much. Property insurance, whether it's commercial or personal, a lot of the companies will not do them. They just won't, because especially if you're close in one of the coastal cities, because the hurricane damage, damage from salt water. There's so many things that happen, especially from a roof claims in Florida. And a roof used to cost $5,000 or $6,000. Now change your roof on your regular home costs you $20,000. So everything has gone up exponentially. The rates are going up, and unless they get a handle on what they can do, what they can sue for, and how they can, how much they can get, how they can sue, they always find loopholes in insurance, and that's really what caused it. So there is some legislation out there right now. Insurance is state regulated, so for an insurance company to increase their rate, they have to go get state approval. So whoever that insurance commissioner is in that state, people don't think about voting for them, but you got to look at who you're voting for, because if they sway a certain way, then you the consumer is going to pay for it, right? If they sway towards the business, and they're swaying towards the lawyers, and a lot of them are lawyers. So guess what? They're not going to go against the lawyer. They're going to make it convenient for the lawyers to sue, because that's their professional. That's a profession. That's the lobbyists, who support them and pay for them campaign. Look at it, because I never realized it until especially in these last 5-6 years. And you've seen a lot of things happen in the state of Georgia. One of the state commissioners, I think he's doing some prison time, because the insurance commissioner, because he was doing some shady stuff, taking some handouts under the table, and they caught him.
Right, voting matters, you guys.
It does. It truly does.
Mr. Bobby, can you put your information in the chat and
Sure I can.
how can people reach out to you if they have some additional questions? And it's all about us making sure we're protecting ourselves, because the worst a position to be in is after the fact. I'd rather we get it before and understand that at least we have it. Uh,
Yes.
and thank you so much for this information, because so often a small business is starting out, and as you grow, you don't even think of your insurance policy or how you might need to adjust it as you grow. So thank you again for taking this Friday out and indulging the GPI community. And we're going to keep it going.
I thank you for having me. Great questions. Even if you have a question, I put my email in there. You can follow up, send me an email. I'll be happy to answer anything. If you just want to talk and ask questions, I'm happy to do it. Commercial insurance is our specialty. So I love seeing businesses grow. I love helping them. So anything we can do, that's what we're here for.
Okay. Thank you, guys. Give him a hand.
Thank
Yes.
you.
Thank
Yeah,
you.
no need. All right. You have a
Have a
great
good
day. Thank you again, Paula.
All right. Bye bye.